Now, Nigeria has suspended gasoline import licenses for a second month in a row as regulators begin enforcing a law which allows imports only when domestic supply falls short, which comes as surging oil prices triggered by the war in Iran ripple across African economies, threatening higher fuel costs, rising inflation and renewed pressure on currencies. While data from the Nigerian midstream and downstream petroleum regulatory authority shows that no import licenses for gasoline were issued in February or so far in March, signaling a shift towards prioritizing local output. In fact, major oil marketers have had their import licenses revoked. It further reveals that nearly all gasoline supplied in Nigeria came from Dangote refinery, which is the largest in Africa. Under the new policy, gasoline import permits will only be issued when local production cannot meet demand, which is not currently the case.
You could go back a week and it was hovering in a stable range of the mid-60s. It's now 118. If you look at freight rates, it would cost us about $800,000 a day to bring crude on a tanker from a Nigerian terminal to our refinery. That's currently $3.5 million.
Well, the development marks a turning point in a battle billionaire Aliko Dangote had previously taken to court, who has long argued fuel imports are no longer necessary, while stressing that such approvals violate regulations and undermine Nigeria's growing local refinery capacity as well. The Dangote Group recently signed 2 agreements worth $750 million with China and India to expand its refinery and petrochemical operations. Once completed, the investment is expected to boost the refinery's capacity to about 1.4 million barrels per day. Our correspondent Louisa Olani has sent us this report from Lagos.
In a committed move to protect domestic refining of petroleum products, Nigeria has suspended the issuance of gasoline import licenses for a second straight month despite price surge by more than 54% since the US and Israel began strikes on Iran. This is in line with the Petroleum Industry Act that only allow imports when the African country's domestic supply falls short. Now, while this aims to reduce Nigeria's historic reliance on imported fuel, questions remain about whether local output can fully meet demand without disruptions. For now, regulators insist imports will only resume if domestic supply falls short. We recall the Dangote refinery last year sued the regulator and the state oil company to force a halt to imports. From Lagos, Nigeria, Louisa Olani, WION World is One.